Hello, hello,
Good.
hello, and welcome everybody. My name is Judah Hoover. This guy right over here is Mr. Josh Weidman. This is the Build and Grow with Real Estate Show. We come to you every day at noon, delivering phenomenal content. I'm not telling you it's phenomenal content. Our regular viewers will tell you that it is phenomenal content, and we greatly, greatly appreciate everybody who likes the show, shares the show, comments on the show. We do a Friday news roundup where we talk about the good and bad news of the week. And what is awesome is more and more, these weeks have been mostly populated by phenomenal and excellent news. Best news, I think, for everybody is last night was the last in the presidential debate cycle for 2020. So we don't have to worry about another presidential debate until 2024. So everybody, I think, is very happy and very excited about that. Yes, thank you very much, Josh, for saying, or for Taz for saying that Josh and I deliver great and excellent content, phenomenal content. That's what we try to do. Do us two favors. Go to buildandgrowwithrealestate.com and get registered for our 5-day wholesaling challenge that we're going to start on November 2nd. It's a free 5-day challenge where our goal is to every day give people actionable items that by the end of that week, they can be well on their way to their first wholesale deal, if not have done their first wholesale deal. We are calling that How to Flip Properties Without Cash, Credit, or Criminal Behavior. And the cost for that is totally free. Also, like our Facebook page, Build and Grow with Real Estate, because we are continuing to develop and push out great content there. And I just want to say that we had again, I don't know what other word to use, but phenomenal. Yesterday's show was just off the hook with great content, and Josh and I both learned a lot, and Josh was taking notes. I was remote and so not able to. So today is going to be a great show. And
Ton of good news in real estate. I mean, overwhelming ton.
yes.
Yeah. Good numbers on the economy. We got good things happening all over the place, Judah.
Right. So I've been there but unable to get to Facebook page. Okay, so we will have to share in the comments the Facebook page, and maybe we will specifically invite Taz, and I'll specifically invite Terry to the Facebook page, and I'll probably just make a post about it so that you can like the page as well.
Awesome. All right, so I didn't even really follow that. We couldn't get to the other Build and Grow page.
Terry is saying that he is unable to get to the Facebook page, which is odd because it's just Build and Grow with Real Estate. And if you type in Build and Grow with Real Estate, into the Facebook search, it is a page that should come up. Or maybe they're talking about the Facebook challenge. So anyway, we'll circle back around and handle that stuff offline. Yeah. So, ladies and gentlemen, we've got some great news for the week. Josh has got to share his screen this year, though.
I got to share my screen here today. All right. So, our fabulous weekly news and commentary. Let's just start on the economy.
Yep.
There's been, look, if you just look at the numbers on some of the stuff that has come out over the last several months, our economy doesn't look very good. But if you look a little bit closer, and what you see is, there was an outside entity that shut down these businesses prematurely and, out of the blue. And of course, there's a lot of economic strife that comes with that. But now what we're seeing is there's a lot of, restaurants went out of business. But there has been 6,500 new restaurants and food businesses that opened up in September. That's according to Yelp. And
is that a nationwide statistic?
Yes, I believe so. But I mean, that doesn't seem like that huge amount, but it's just the fact that it's outpacing 4 years ago. And in a lot of places, you can only put 50% of occupancy into the building at any given time. We can see a demand there for the product, and it's I don't know. I think it's a really good note.
Yeah,
Um,
absolutely. I think it's great. It's also, we're going to talk about this a little bit more when we get into the economic thing, but one of the things that we've talked about is that there is an incredibly high churn rate in business numbers right now. So you can decide to look at it either way you want. And you can say, oh my goodness, look at all these businesses that are closing and laying people off. Or you can look at it as that there is a lot of new businesses starting and there's a high recovery rate. And both of those things are happening at the same time, and there is some balance and some equilibrium. And it's unfortunate that there's some balance and some equilibrium, but I think after the election, we are going to see a significant breakout in one direction or the other. And we'll talk about that more later. But the next bullet point here is Tesla is just on a tear. And, for the longest time, Tesla was selling cars and losing money, selling cars and losing money. And everybody said, oh, Tesla's not a real car company because they're not making money. And the only way they're making money is because of government subsidies and things like that. And their stock prices is inflated. It looks like they've done what tech companies like to do, is remain unprofitable, remain unprofitable, remain unprofitable, and then really spike. If you look at Amazon.com, for example,
yeah.
it was around for, somebody's going to fact check me on these numbers and say that I'm wrong, but they were around for like 15 years and didn't show a profit. And before they started showing a profit, and they've been profitable now for a while, but they grew, and they put all their, instead of showing a profit, they just spent that money on R&D. And then they
Acquiring,
were
they
right,
acquired companies and expanded. Yeah, absolutely.
taking market share. And what that enabled them to do was continue to grow. Tesla has been on a similar path, and we're seeing Tesla now get into a lot of other things like smart home technology and smart batteries and powering solar panels on roofs and things like that. So, Amazon is still not profitable. They make money off web services. Yeah, Amazon is really it's funny, they internally solved some problems for offering web services, and now they're a B2B executive level um, web hosting and web service company as well. So there's a lot of really neat and interesting things that are happening. And Tesla was shorted, and their stock has been beat up and things like that, but they're really on a tear, and it's great to see. So talk to us about
The
Facebook's
Facebook. Okay,
Tesla
so
their next door thing.
right. So look, this is going to lead into our next story. But Facebook, they're testing. Nextdoor is a company that is kind of like our main story in the economy section. We're going to look at this in a sec, but it's basically an iBuyer platform, right? And Facebook now is seeing this model, and it looks like they're going to announce this new clone similar to this Nextdoor model called Neighborhoods. And rumor is that they're going to be stepping into that space. It's a very, very interesting transition here. As you look, all right, I mean, it's going to lead into our next story. There is like billions of dollars in equity and debt that is going into that's been invested into this company, Opendoor. One of the I don't know, the guy who thought of the idea of putting this together.
Now, you say, is Opendoor the unicorn that slays the NAR or NAR dragon? You should probably have some dots in there to explain what that is to people.
Okay, the National Association of Realtors, right? I mean, it's this huge nationwide organization that represents real estate agents, specifically represents their members, which is a trademark. So it's realtor. So it is I mean, they're the monster, right? Like if you're going to buy or sell your house, most agents that you're going to talk to are members of the NAR and of the local branches because they hold the keys to the MLS, right? And so
You
if you
can't get access to the MLS unless you are a member of NAR and pay dues. And the accusation and what they allege is that they do price fixing and price control at the 6% level.
right, and that's not even the story. I'm just looking at this and saying, you know, we talked a couple times about these tech companies that are stepping into the real estate space and some of the changes that they're making. Opendoor has a lot of money behind it. Like the reason this is important is that they're in the plans and in the midst of doing an IPO for the company, right? So the history is this guy that is a PayPal alumni comes up with this idea in 2003. And so they start putting together money and buying properties and, going through their model and refining their model. Until last year, they sold 18,800 homes in 2019 and generated $4.7 billion in revenue. I mean, that's pretty big. And, Nextdoor holds 64% of that iBuyer market, which, a lot of people hear about.
Crazy. That's crazy because, you usually think of the other ones when it comes to, Redfin and
exactly.
Zillow when it comes to the iBuyer market. I did not realize that Opendoor had a 64% market share.
And that is down from 2019. Or in 2019, they had a 70% market share. So, a lot of what has affected their market share is Zillow's pushing, but also the number of available units to purchase is significantly less. They were saying in 2019 they were buying 200 or 300 properties a month, and now it's like 70 or 80 properties. So it's still a lot of homes, but you're talking 21 different markets, across the country. And anyway, long story short, they're looking to expand everywhere.
Right, and small margins are very typical in fintech and tech startups and things like that. That's also a small tight margin is the model that Slate House Group has used. So we come to market for our property management services at about a 40% reduction in fees and costs over the competition, and it's how we're able to be at 4,000 units across 4 different states in only about 8 years of operation. And the first 2 years of operation, we were really in super stealth mode. So really just in about 6 years, we've been able to grow to 4,000 units. That's pretty amazing. And it's the type of accelerated growth that you can see. The problem that Opendoor presents to other flippers and wholesalers and buy fix and sell guys is that they're willing to operate on a much tighter margin. So they're able to, potentially pay more for real estate than what others are. The benefit is that just like WeWork didn't push out of the business place, a lot of other did push out of the a lot of what's that?
A lot of office spaces. I mean,
it's a lot of co-work space and office space and things like that because they mostly operate in extreme downtown locations. The same thing with Opendoor. They're usually operating only in primary markets and some suburbs of those primary markets. Well, a lot of even in those primary markets, there's tons of other business. It's like saying being afraid of Opendoor, dear investor, is like saying I don't want to open up a mom and pop pizza shop because Pizza Hut exists. Well, guess what? If you're worried about not being able to make a better pizza than Pizza Hut, you got a problem.
And I think the real question here for investors, the real setback, I guess, is if you've got somebody that has enough foresight and capital and size, brand ignition, everything, recognition, everything.
Brand ignition, that was good.
Yeah, exactly. Brand ignition.
Brand and recognition. That was a contract. That was a contraction. You created your own contraction there, Josh. I liked it.
It's Friday, man. It's Friday. I'm just getting ready for the weekend. Slurring my words all weekend long. But if you're going up against a competition that, number one, it's a nationally known brand, or you've seen it on TV over and over and over again, and who is willing and able to pay significantly more for the property, because this runs into one of the problems for Opendoor for expansion and sustainability. Right now, their their profit per transaction is only $5,000. I don't know anybody, any flipper, that would buy and then resell a property with only a $5,000 margin at the end of the day. There's way too much risk there.
Right.
And I think that, that leads into where we are in the market, and not that there's going to be a huge dip and dive or anything like that, but we're in a market cycle. Prices go up and down. And if you're in the middle of that cycle, it's not really that big of a deal. But when you start getting on polar ends of it, you can either have big ups or really big downs in the value.
I would also say this, that if you are in a market where you are competing with Opendoor, one of the things that I would encourage people to do is wholesale to Opendoor.
Yeah.
So buy dirt cheap, fix up a little bit, and then sell to Opendoor at a discount. So a friend of mine says that he spanks Zillow on a regular basis because he sells to them in their market, and also just shows people who want to sell their home to Zillow how they could have gotten more money if they would have worked with him than selling to them. So there's a number of different ways to get creative here and not be afraid when you see or read in other real estate locations, news outlets, or even the mainstream media about Opendoor. I am not afraid of companies like this for my own personal investing.
Yeah. So, let's move on to job numbers. Unemployment prior to last spring would be a real shock, but it's looking good.
Right.
Looking good. The continuing claims, I think the biggest news of the week here is continuing claims dropped over 1 million. We're now at 8.4% continued claims. I think there's
8.4 million continuing claims, not percent.
Thank you.
Yep.
8.4 million. Anyway, I think the big story here is that you can kind of look at this in two different ways, and it could have two different meanings. First of all, the overall claims went down for new unemployment claims, right? Dropped 80,000 or something like that. In addition, the new PUA claims dropped again. So that's great. I think we're getting to a point where, there's a certain amount of claims that are being expected as we kind of cycle through some of the business failures caused from this COVID mess. And I don't think that those new unemployment claims are going to stop until we get to some point where, this thing has kind of played itself out.
Yeah, absolutely. So, Steve, thank you very much for your comment. It is all about having an abundance mindset. And Jeremy, yeah, you're exactly right. You got to buy Christmas presents. I got 4 kids who are clamoring for Christmas presents, and they don't want to hear excuses about the economy. They're not interested in being shortchanged in their stocking because it was a rough year. So I'm out there hustling to do what I can to make it happen so the Christmas food will be great. And when Q4 rolls around, that's what a lot of people think. These unemployment numbers are very high. There is a lot of churn that's happening right now in the market, but we are continuing to get things better and better and better in the economy, which is ultimately going to mean that there continues to be buyers out there for houses, or high quality renters out there for houses. And we should, like Daryl said yesterday on several different occasions, don't take your foot off the gas pedal. Do good deals. Yep. Josh, out of caution, don't buy with reckless abandon and get yourself in trouble. Don't over leverage. Don't count on appreciation. Don't speculate. It's always the time to invest, not speculate. And if you can get very favorable terms or a very favorable price, you can and should invest. You can pay cash for real estate and not get really good terms. Cash is some of the worst terms you can get. If it's not your cash, or you're paying with your own cash, but you're getting a good price, that's fine. If you can get really great terms where you're paying basically full price but you're doing seller financing or other people's money, and you can live off of the rental spread and get some principal reduction. That can be a good deal too. So the economy for buying real estate right now, we are at the peak of how bad this recession could or should get. We've been seeing that we're not looking at a double dip recession. And so my message to people is get out there and do real estate deals. Pay attention to this show, because if things change, we can let you know about that and let you know what you should be doing different. But as of right now, we are not seeing anything but green lights continuing for the real estate market for the next year to 2 years.
Yeah, so that takes us right into housing. So just as an overview, here's some interesting things going on. Home purchases worth over $1 million are up more than double of last year. More than 2 times what we did last year in million plus homes. The median home price.
That doesn't mean, now let's just talk about that, dear listener, because that can be a confusing thing to talk about. That doesn't mean that the value of luxury homes has gone up. That just means the volume, the number of those transactions has doubled.
Well, I will also say, though, I think that the value has increased as well.
Sure, but we're not saying the value is doubled. The value has gone up, but that specific statistic means that the volume has doubled. The number of sales has doubled. The number of transactions.
Yes. Median home price, which is the one right in the middle of all of the sales for September, reached another historic high, 311,800 across the country. That's 15% higher than the same time last year. Crazy. All right. So September home sales of existing homes, they jumped 9.4%. I mean, that's wild.
Right.
What do you think? It's just a chase to get back.
So existing homes. So they call them existing homes because calling them used homes doesn't sound as good from a marketing perspective. But these are not new construction. So they separate out new construction and existing homes. And again, just in September, the volume has jumped over 9%. So this is continuing to put a pressure on inventory, continuing to mean that there is a supply versus demand imbalance, which means that we are going to continue to see an increase in price. And remember, the last time we saw prices go up and up and up and up and up, it all unraveled because there was phony, baloney, plastic banana, good time rock and roll mortgages being written. And because there's not phony baloney mortgages being written, in order to qualify for these mortgages, you've got to have the credit, income, and down payment or cash to be able to back it up. It speaks to underlying health in the housing market. So you might not be able to believe it, you may not be able to understand it, but the reality is there continues to be strength in the housing market.
Yeah, and so 2 things going on here. The mortgage applications dropped 2% last week, 4th straight week of losses. But look, it's we're running out of inventory.
Right. I wonder if that is right. So a 2% drop, I mean, is pretty meaningless as far as I'm concerned. Right. And the other thing is that's just applications. There's a lot of people who apply all the time who have no business applying. There's a lot of people who I'm not sure whether that statistic includes refinances or not, or whether that's a global, holistic look at purchase money applications and refinance applications.
I can't tell you.
Yeah, we should split that out. But the point is that could be part of what's hidden in that drop as well. Because I know, because I had a mortgage company for 15 years. You reach a point where you run out of people to refinance.
Yeah, that's fair. Last but not least, here, this is good news for housing pricing stability. Not great news if you're looking for more inventory hitting the market soon. The housing starts were a little bit lower than expected. Not a lot. It was like 40,000 homes, but annualized, we're looking at 1.415 million new homes being built right now with housing starts, and then we have permits. Permits came in last month 5.2% higher than they were expected, which is good news for some homes in the future. But to keep up with demand or really have a big influx on inventory, I think it's going to be a while.
Well, yeah, but it's still it just means that there is lots in the pipeline coming down. Lots of us to buy, fix up, and sell. Lots of us to, lots of areas to invest around where there's new housing construction going on, because then whereas you are also competing with new housing construction, typically where there's new housing construction going on, that it also increases the tax base, which makes the schools better and things like that. So if you're looking to buy and hold, buying and holding around and within a mile to 2 miles of a lot of new housing starts is usually a good bet.
Yeah, it is. The big news of the day here for real estate, I mean, market rate rents for for stable for market rate rents. Gee whiz, I'm losing my mind here. For the market rate rents, properties that multifamily homes that were rented at the market rate, essentially, they've kind of stabilized. While there was a dip and it wasn't looking great for collections and things like that, it has completely stabilized over the last 2 months and actually is up in October, as opposed to a full September, which is really awesome, to look at. But then you look at, a lot of the really late delinquencies and total defaults. It's coming from the either subsidized or the rent regulated apartment buildings, which is really something. And those numbers are really high.
Yeah, those numbers are really high, and I think that they are artificially high because, again, I have 4 kids, and they know that if there's no consequences for their action, like if they know that their daddy's not going to be able to watch them, guess what? There's misbehavior that goes on. Unfortunately, when we tell the median to low income housing segment that we're not going to be able to evict you, guess what they do? They stop paying rent. And
Right.
even a lot of the good actors there that were good actors and well behaved for a while, they only do that for so long before they realize, geez, am I really being the sucker here by continuing to pay my rent? Should I just go ahead and skip that?
Yeah. So it is what it is. But if you're in a multifamily deal right now, like, it looks like you're going to be able to really predict what vacancy and collection rates and all that kind of stuff are going to look like, even if this eviction moratorium is pushed out into next year.
I think the other good thing here is, even though they eventually have to pay, and even though we eventually will be able to evict, and even though we will eventually be there's a forbearance agreements and things like that on mortgages. If you have 100-unit apartment complex that is partly rent subsidized, this is obviously putting stress on you, right?
Absolutely.
That operator, this is putting stress on you. And so there is going to be people who want to sell part or all of their portfolio, which is going to add more supply of these apartment complex to the marketplace. And Josh, you and I both have a lot of friends, and I have a lot of clients who are looking to buy with both hands these things, and they just can't find them.
Well,
so
and
I think
should be coming too, because look, the value is based on collections, right?
Right. So I think that we're going to see more supply in that space, and sometimes when supply comes into that space, if it goes through something like a foreclosure event, a lot of the taxable benefits that were granted when it was built are no longer apply. And it can shift from subsidized housing to market rate rent. And subsidized housing, there's like tons of different programs. We colloquially just refer to it all as Section 8, even though that's not technically accurate or fair. But there's basically market rate rent and Section 8, and where we're seeing the problems is in all the Section 8 housing.
Yeah, and it's it's predictable. A lot of times, you'll see this with a lot of turnkey operators, right? the highest rents in the market are Section 8 or government subsidy, right? And so, and they're predictable, and it's easier to rent a decent property at a higher price to somebody who's not paying the rent. Yeah,
Right.
you know what I mean? So like you see that, but if you base your calculations on the value of a property based on fair market rents, if you have a decent property, you're going to be okay.
Yeah.
That's
Well, let me push back here slightly, because this is actually one thing where you have to know your local market. One of my favorite musical, and yes, I am a red-blooded American male that loves show tunes and musical theater. However, my favorite musical is The Music Man, and there's a song in there that you got to know the territory, and to be a salesman or a businessman, you got to know the territory. So, in Philadelphia and Baltimore, two major markets close to Josh and I, two primary markets close to Josh and I, it is true that Section 8 sometimes trends above market rent. However, in most of central Pennsylvania and most of the other suburbs of Baltimore, it the reverse is true, where Section 8 usually lags behind. Where Section 8 usually lags behind, and the I just know a lot of owners who traditionally over 20 years have owned Section 8, and they're transitioning Section 8 housing to market rent housing.
yeah, yeah. I mean, that makes sense across the board. Okay, all right.
Last slide.
Yeah. Last but not least, listen. Cool stuff is about to happen with cryptocurrency, and if you are on Cash App, and I'm sure others have it as well, you can hold cryptocurrency within one of those types of accounts, transfer and stuff like that. And you have to get your identity verified and things like that. But the cool thing about this is that now you can do it through PayPal, and PayPal has come up with a way to actually allow merchants to receive the money in the currency that of the place. So, in the US it would be a dollar. You're going to get the merchant is going to get paid in dollars, but they've got some kind of, I guess, credit debit type system to.
Yeah, so it's almost like, I mean, the way I like to think of this, and this could be wrong, is right now we have dollars based by the full faith and credit of the U.S. The U.S. Treasury system. We are going to have dollars backed by Bitcoin and other cryptocurrencies, and PayPal making its way into this marketplace is a huge legitimizer
Yeah.
for Bitcoin and other cryptocurrencies. And it should also, hopefully, not only will it add some value to it, but hopefully also add some stability to it, so that it's not as fluctuative. It's not as volatile, is the word I'm looking for.
Yeah.
As what it has been. So, just to wrap up the show on two quick notes here. This is our second story of the day where we mention PayPal or a PayPal founder.
Yeah.
And so, but we have not mentioned Elon Musk. So I think that two PayPal references and an Elon Musk and a Tesla reference, but no direct reference of Elon Musk. I think that's about the exchange right there. I also want to say, yeah, Howard Hill is absolutely one of my favorite fictional characters, right up there with Jean-Luc Picard, and I do play the trombone. And I use the think method to do it. So thank you very much, Steve. Fans of The Music Man will get that reference.
That's funny. That's funny. Awesome. All right. That's all we got this week. Everybody have a fantastic weekend. Make sure you go to Build and Grow with Real Estate to sign up for free for our 5-day challenge, flipping houses without, what is it? Cash,
credit, or criminal behavior.
Thank you. Awesome. Hey, if you enjoyed the show today, don't forget to like and share. Have a great weekend, guys. We will see you on Monday. Take care,
everybody.